Hey everyone, Simon Says Money here. Welcome back to another video. Today, the stock market on March 15th, 2021 was pretty much green all across the board. Today, I'd like to present some recovery stock that you should consider putting in your portfolio right now. As a disclaimer, I'm not a financial advisor or CPA. Please use your own investment decision. Now let's go out there, make some money together, and achieve financial freedom. With that being said, let's get on to this video. In my previous video, I analyzed some recovery stocks such as United Airlines, Carnival Cruise Line, Norwegian Cruise Line. Today, I am going to elaborate on these recovery stocks and add some more recovery stocks because I believe in today's situation, these recovery stocks or ETFs will be doing great for the next 6 months or 1 year. The bond market is once more the wild card for the stock market. It could rein in any gains in tech or growth stocks if yields continue to rise this week. Bonds could be volatile. If yields do go higher this week, that could make it difficult for big tech and other growth stocks to gain traction. Therefore, we need to pay close attention to it, especially Wednesday afternoon, Jay Powell's briefing. The Fed Reserve meets Tuesday and Wednesday. While it's not expected to take any action, it could be a catalyst for a move in yields, which in turn will affect the Nasdaq tremendously. Value and cyclicals could continue to lead the market as investors bet the vaccine rollout and fiscal stimulus will help the economy's reopening. Rising bond yields, 1.64%, the highest in a year, have been challenging the growth stocks. Names like Apple, Tesla, and Amazon have been lagging as investors move to traditional and cyclical groups that do well in an economic recovery. Even so, the S&P 500 and the DAL both closed at record highs of 32,778 points last Friday, while the Nasdaq Composite was lower. The economy is going to be unbelievably strong this year because of the deficit spending, reopening, and the vaccines. I think there's going to be pressure on the rates moving higher. Over the last month, energy stocks have risen nearly 20%. Financial stocks are up 10.2%, and the industrials are up 7%. The S&P 500 technology sector is down 5.4% over the past month. From these data, we see where the opportunities are. Those traditional or so-called cyclical stocks. Let's take a look at some of these stocks. We have United Airlines, Delta Airlines, Spirit, Carnival, Norwegian Cruise Line, Boeing, Disney, the Global Jets ETF, JETS, and ARK Innovation ETF, ARKK. Okay, ARKK is not a recovery stock. It is rather a high-tech ETF and an innovation ETF, but I still list it because, as I presented in my previous video, this one, in which I compared the stocks which will bounce back quicker after a correction, we found that ARKK will bounce back more quickly than other index or stocks, except TQQQ, which is usually up down hugely. And regarding to Jets, it's an ETF which is composed of most major airlines companies. I believe that it is an excellent choice of investment if you don't know which airline company to invest in. The airlines are a necessity for most other entertainment and vacations such as cruise lines, Disney World, weddings, casinos, or other sports events. Therefore, the stocks of airlines will bounce back first before other leisure stocks. Some examples of these assets in the Jets ETF are Southwest Airlines, American Airlines, Delta, United, Allegiant Travel, Spirit, Alaska Air, JetBlue, SkyWest, and Air Canada. Let's take a look at some of these recovery stocks. First, we have United Airlines, ticker symbol UAL. Today, it is up an astonishing 8.26%, currently trading at $60.94. We can see it has been in an uptrend the past couple weeks. Delta Airlines, same thing. Today, it's up 2.33% at $50.99, and beautiful breakout pattern that we are seeing right here. Spirit Airlines, it is up 1.79% today at $39.31. Again, another beautiful flat top breakout from a technical standpoint right here going on. Carnival, CCL, up 4.67%, currently trading at $29.79. Another breakout, not as clean as the other one, but we can see this big run up since the beginning to mid-February all the way to here after it consolidated in this area and another pop. Next we have NCLH at $31.56, up 2.7%. It is trying to make its way back to this high, $34.49. I especially like Delta Airlines. These airline stocks, especially the share price, will be very soon reach the level of last year's 2020 February/March level. Their shapes are very similar to each other. Now let's take a look at the famous stock Disney. Ticker symbol DIS. Today is down 0.2% at $196.76. We can see that it's been going up on a run up. Huge volume right here on December 11th, and then it has been making higher lows and higher highs, consolidating a little. I expect a pop pretty soon. The Disney stock share price has recently hit an all-time high of $203.02. This indicates a sign of how much pent-up demand exists to return to a pre-COVID-19 life. Disney is like beneficiary of the pending normalization when parents are again able to take their kids on vacation, certainly providing a positive impact on the company's earnings. Disney may set all-time high when it reports second quarter earnings in May. Imagine what it's like when the theme parks are packed with people who have been staying home for way too long, who have money because of limited spending during the last 12 months, and are receiving an additional $1,400 stimulus check pretty soon. Be prepared, Disney stock will surge. Okay, that's it for today's video. Thanks so much for watching. Don't forget to like and subscribe. Those are some recovery stock that I really like. You can check the JETS ETF airlines if you are kind of confused or you don't know which airlines you want to buy. Jets is a great option. Disney is another one. And Carnival, Norwegian, cruise line stocks are also really great, and expect them to have positive earnings when things go back to normal very slowly. Again, thanks so much for watching this video, and I'll see you guys in the next one.